Welcome to the Tidecrest Triple 3's for December 2025. Each month we spotlight 3 numbers impacting the capital markets, 3 news stories driving investor sentiment, all in 3 minutes. Let's dive in. 3 numbers, 25 basis points. Again, the Fed funds rate was cut another 25 basis points this month. This marks the 3rd rate cut of the year and the first time since 2019 the rates have been cut at 3 consecutive meetings. The Fed took this step as it continues its effort to support a slowing economy while guiding inflation back towards its target. Markets largely anticipated the move, but the tone of the Fed's communication and the fact that 3 officials dissented suggests a more cautious path ahead. Why it matters. The rate cut influences borrowing costs across the economy and can support spending and investment. The move signals how the Fed views the balance between stubborn inflation and slowing economic momentum. $62. Oil price per barrel. Down sharply from its peak in the low 80s earlier this year, prices have retreated as global demand softens and inventories continue to rise, outpacing the impact of production cuts from major exporters. Why it matters. Lower oil prices help ease inflation and reduce costs across the economy, which supports the Fed's effort to guide a soft landing. At the same time, a pullback of this size can signal cooling global growth. Investors are watching closely to determine whether this is healthy normalization or an early sign of broader economic weakness. $1.5 trillion, amount of corporate and government debt scheduled to mature in 2026. This is one of the largest refinancing cycles in years. Much of this debt was issued in a low-rate environment and will need to be replaced under different conditions, which could challenge companies with higher leverage or uneven cash flow. Why it matters. A refinancing cycle of this scale can influence credit markets and overall risk appetite. Stronger firms may manage a rollover smoothly, while weaker borrowers could face pressure if growth slows or lending standards tighten. The outcome will shape corporate balance sheets and investor sentiment heading into 2026. 3 stories. Consumer credit stress edges higher. Delinquencies on credit cards and auto loans have reached their highest level since 2019, with the sharpest increase among younger and lower-income households. Lenders are tightening standards, and banks are reporting modest increases in charge-offs, making pockets of consumer strain more apparent. Why it matters. Credit stress is an early sign of weakening consumer health. If delinquencies continue to climb, spending may slow and weigh on growth. These trends also shape lender profitability and risk decisions, offering investors a key signal as they look ahead into early 2026. Payroll data returns after government shutdown gap. With government operations restored after the record 43-day shutdown, the Labor Department released its first employment report since early fall. The data showed modest job gains and slower wage growth, giving investors a clearer view after weeks of uncertainty. Why it matters. Accurate labor data helps shape expectations for Fed policy and economic momentum. With clear information, investors can better assess whether the slowdown remains gradual or starting to accelerate. Mergers and acquisitions pick up. M&A activity has accelerated as companies take advantage of better financing conditions and clear signals on interest rates. After a quiet first half of the year, firms in tech, healthcare, and industrials have returned to the deal market, citing improved valuations and more favorable environment for strategic expansion. Why it matters. Rising deal activity often reflects growing corporate confidence and highlights where companies see the strongest long-term opportunities. Increased M&A can shift sector leadership and provide investors with useful insight into how corporate strategy is evolving heading into 2026. That's it for the Tidecrest Triple 3's for December 2025. 3 numbers, 3 stories, 3 minutes. We'll be back next month to track what matters most. Thanks for watching.